Hi guys, welcome back to Marantz Rantz. Plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. Try to slow down on this one, only because I'm relaxing. It's Memorial Day. I'm enjoying myself. This is Connecting the Dots Part 23. If you guys don't know what this is, it's a series that we built on this channel about, well, within the last 6 months, we've been studying bankruptcies and, of course, private equity and the leverage buyouts and how it all works out. Anyway, no edits, no cuts, guys. We're going to go through it. We're going to run through it. I have a PowerPoint presentation to take you through. Let's get through it, huh? Here we go. So why am I doing this video? This is Aron, this is AMC, and it says, what are you doing? I asked this question only because I was asked a question in the comments of my last video. It said, Marantz, can you explain to me why AMC movie theaters lost so much money in 2017? You know, it was just like a pop-out year. And I said, yeah, well, I could have replied back with, yes, they were acquiring things. Here's what it was. And no, I didn't do it that way. I said, let me go study really quick. Let me go revisit the story, make sure I give you guys the correct information. And while I'm revisiting the story, I get a phone call from my buddy. And my buddy's looking at charts. He's looking at graphs, and I have my own. I draw my own lines and I go from here. And I said, what's going on, man? He says, hey, man, I want to invest in this company. I was like, cool. What company? He names them and he goes off. And I said, okay, who's on the board of directors? He's like, I don't know. I go, what's the direction of the company? I don't know. I just saw the chart and it's going good and everybody's talking about it. The industry looks good. I'm going. I said, oh, okay, you're one of those guys. All right, what's going to cost you a lot of tuition to find out exactly how you want to invest. Now, I'm an investor. I'm not a trader. If you guys are looking for day trades, if you guys are looking for things to pop over the week, over the weekend, I'm not your guy. But I am your guy if you guys want to understand how to invest in a companies, build some wealth, and move on from there. Right now, AMC movie theaters on this logarithmic chart here is on its way down to around $3.50 over the next 12 months. Could it get there? Absolutely. With the downward pressure that you see, downward action you see, this is all diminishing returns. All those breakout points against the line, it's usually around earnings. That's what it has been. Those are all earnings periods there. So I tell you, there could be a potential breakout coming over the next earnings report when they hopefully they make a profit. For the sake of a lot of people that need to get out of this stock, catch it while it's going up and get the hell out. But if they can't turn a profit this quarter, they're never going to turn a profit. This is just my opinion, but we'll go over that in a minute. What I was doing, just to go back to the story, I was reading the SEC filings and I saw some board of directors on there that I hadn't seen in a while. So I revisited the story and I said, okay, where did they come from? Who was that? Now that I know the information that I have, these last 6 months studying bankruptcy, studying, private equity and all the firms that are involved, I've learned a lot of hot names. You look at the name of the company and you go, oh, that's tied to KKR, or oh, that name's tied to BlackRock. Well, in this case, Blackstone and Apollo, those are the two largest private equity firms, and I always look for ties. But it's not hard for AMC. It's not hard to find them. And here's one right here. Steven Culinero, this guy right here was the chief marketing officer. He's the first chief marketing officer ever for AMC movie theaters. Now, although he didn't have a resume that warranted success, that would tell you that he warrants a hire, certainly not on the board of directors out the gate, it tells me that he's a plant, right? For lack of a better term, at the time. He's been with AMC now for 12 years until he retired last February. And I'm talking about February 2022. But he was the first chief marketing officer for them. Did they ever really need one? Who knows? At this time, they're already on the downswing. 2009 when he got hired. And I tell you right now, guys, I'm just letting you know, private equity was involved with AMC movie theaters. Apollo owned them and sold them off to Wanda. But when they sold them off to Wanda, it was like with like this little sticky note. It was like, hey, we still have guys here that can still make these decisions to ruin this company. Just, it's one of those classic, and excuse my language, fuck around and find out moments for a lot of investors. That's what AMC has been. So when I look at this guy right here, Steven, he should have never been there. Look at his track record. He worked at Blockbuster for 12 years. Strategic marketing didn't work out so well. Bankruptcy. Worked at Washington Mutual. Didn't work out so well. Bankruptcy. Worked at Radio Shack. Didn't work out so well. Bankruptcy. Worked at AMC movie theaters. And yes, it will be bankrupt. You will see it, and or it will be bought out by private equity. There's no way they pay off their debt. So I've seen this guy fail every which way. I also saw him do a marketing campaign with Nicole Kidman and only featuring it on investment channels, not on channels that we would actually try to get people to go to the movies. They were just trying to manipulate you, and he's one of the snakes here. So I see him being planted into every company that he's ever been with, failed with every company he's ever been with, and now that he's gone, you'd be like, oh, well, that's a good thing. He's gone. And I'd be like, okay, well, who did he replace? Who replaced him? And it's this guy to the right. The guy to the right here, his name is Elliot Hamlish. The guy to the left, that's Dan Ellis. Dan Ellis got promoted. Dan Ellis used to be in charge of the international section. And Sean Goodman took over international. Now, I don't know why they feel their CFO, who has no history of running anything inside a movie theater, is in charge of the international movie theaters, other than the fact that he's born in South Africa. Sean Goodman's also on the board of directors for Highcroft Mining, which he shouldn't be as well, because the money that they spent $25 million. And that money's gone to, it's a poor investment, but that's neither here nor there. We've talked about it before. But let's go ahead and talk about Elliot Hamlish. Elliot joins AMC via Wyndham Hotels and Resorts. That has direct ties to Apollo. He also comes from Starwood Hotels and Resorts. That means he's direct ties to Adam Aron, which is Apollo, by the way. Adam Aron's been with Apollo for 9 years before he ever came over to this company. And then he's run other companies like Vel Resorts. That's Apollo. The 76ers, that's Apollo. You guys name Norwegian Cruise Lines, like anything that has to do with hospitality in a way, it's basically Apollo has a footprint in there. So I just know exactly what this is. I knew what it was when he got hired, but I wanted just to revisit that story that you guys see it. And if you guys ever want to know, like Mark Rowan, right, the CEO and co-founder of Apollo, board of directors, he's with Vel Resorts, he's with the Wharton School, which I forgot to tell you that part. Stephen Calorino went to Wharton Business School as well. You also have him, now I'm talking about Mark Rowan, Norwegian Cruise Lines. He's been on the board of directors there. He's been with Caesars. He's been with everything because he is Apollo, right? So him and Adam Aron are very tight. And I know Adam Aron's tight with Josh Harris. I get that part. But all these guys ran the same thing, the same company. So they're all trying to get there. Now, here's what I want to point out to you guys, and here's why I'm making the video, because I was reading through the covenants, and I was like, whoa, they need $100 million. So they actually have to have $100 million on the books, no matter what, if they don't want to default on the current covenant suspension. Now, the company is currently subject to a minimum liquidity requirement of $100 million as a condition to the extended covenant suspension period. Now, that extension was given by 3 banks all the way till March 31st, 2024. What happens then? Well, all hell breaks loose, because I don't know how much money they're going to have by that point. That's a year removed from now. And last year they managed to lose $1 billion. I don't know how much they plan on losing this year. It's going to be hard to raise cash if this order doesn't go through, this court order. But I was looking at this chart down here. This is a separate chart that I cut in here, and it shows you the pay. If you look at Stephen Calorino at the very bottom, he literally made $1.7 million when his base salary was $500,000 in 2019. But in 2020, he was given a bonus of $347,000. In addition, he made $2.8 million. This is why the guy retired. He made so much money, he couldn't believe it. 2.8 and 2.5 when he was only making 1.6, 1.7. It's a drastic increase of 1.1 million. Additionally, Elizabeth Frank went from 1.8 million to 3.1. John McDonald went from 2.2 to 3.4. And Sean Goodman came in the gate at a $600,000 salary and a bonus of $761,000. And instead of making just $1.3 million, which would be great for anyone, or 1.4, he's making 4.2 and 4.7 a year. He's making more money than he could ever imagine, Sean Goodman. And is he so great? They've managed to lose $7.5 billion over the last 7 years that they have been there. This same board of directors. Yet they're paying themselves hand over fist. Adam Aron went from $9.6 million all the way to 23 plus this year. He's making double, triple what he was making before. They all are. Now we'll go ahead and look at this. In that year, 2020, that they gave themselves double the raise, and everyone got almost double their money. 2020, the company lost almost $5 billion in operations because of COVID. Now, if you look at the top here, it's going to tell you the initial bonus. During COVID, the initial bonus for Adam Aron was 1.25. They agreed upon that in October, guys. In October, before they did the share offering, before they raised all that money, they said, all right, we're going to give out these bonuses. 1.2, 250 to Sean Goodman. McDonald got 194. Frank got 180. And Calorino got 173. Then they got an additional bonus in February. They went ahead and cleared out an additional bonus February 2021 because the stock price was so high and they raised so much money via an offering. They went ahead and tripled up on their bonus. And now you see the final payouts and bonuses. That really did happen. In addition to that, Mr. Sean Goodman gets paid retention bonus every year. He got his first one April 4th, 2022 of $450,000. He's getting another $450,000 this year and $900,000 next year. Almost $1 million bonus just to stick with the company when he's already making 4.7, 4.6 million a year. It is absolutely embarrassing how much money they're paying their executives for a losing, failed company. Now, here's why this company's going to lose. Because the leasing, operating leases, and finance leases are ranging on average 9.2 years to 13.6 years. They're going to be paying on these leases for that long. And guys, look at the next chart here. This year, right now, this year, 2023, they have to pay $729 million in leases. It goes up by a whopping $150 million next year. And that's just on that category. 150, it's the highest year that they have to pay leases next year. And you think they're going to have that money? Look at the next line. The next line is the accounts payable lease payments, where they need to make $15.4 million in addition to that. This is deferred lease amounts. So they deferred $15 million already on the 729, in addition to 729. And if you go down, they still have to pay an additional $54.9. So they're actually paying $70 million more this year that they have to find that money. And then the next following year, they got to find another $16 million on top of that 800. Go look at it again, guys. $874 million right here. This amount, 874, they have to pay plus the 16 right here, 15.8 and 1. That's 16.8, 17 million. You're looking at an $890 million they're going to have to pay in leases. And you think they can handle that increase when they don't make a profit? How about the debt itself? This is the principal amount of corporate debt. And the principal amount there is that they only have to pay $15 million this year. So you better make a profit. You haven't had to pay off any bills whatsoever on your corporate debt this year because you deferred it all off to 2026 and 2029. And you're telling me you only have to pay $15 million? So I better see something, Adam Aron. I'm asking you, what are you doing? What are you doing to make a profit? Other than deferring money to make it look like you're going to make a profit. The same thing with 2025. At $24 million gone out the window, here we go. That's where we're going to be. $118 million, but look at that monster of $3.1 billion you're going to have to defer. And I don't know who's going to let you last that long. Not when you're burning cash. I ask you all of this, guys, because when you revisit this story and you revisit this stock, and if you know what the hell you're looking at, yes, I can show you that the previous CMO was private equity. He was a plant, absolutely. Then you go ahead and look at the new guy, and what is he? He's a plant, the same exact companies that Adam Aron worked for. They're overpaying their executives. They're not doing what's right for shareholders. And then you're going to tell me, but it's okay because Little Mermaid is in the theaters today. Fast and the Furious X, they're going to make money. That's a recipe for disaster right there. That's what I'm showing you in this video. Maybe you don't see it. Maybe you do. I could break down even further every single board of director like Philip Ladder and his ties to Standard Oil or Marathon Oil, if you guys know that monopoly. But Adam Aron's no different. Adam Aron's been tied up with private equity from his whole career. And you don't just leave Apollo to go run a company and not still have ties with Apollo, not still have influence. That's not the way it works. In the words of Leon Black, we plant our seeds, we maximize value, and we exit. Good luck, guys. You're going to take a bath. We're batting 1,000 here on this channel as far as what stocks to invest in and which ones not to. Now, I'm going to tell you a story on the way out the door here. It's Memorial Day. Why not tell this story, right? So, you could invest in anything you want. You really could. But before you call me and ask me what you want, what you should invest in, what you should do is do some due diligence, do your homework on who the board of directors are and what they stand for. Don't tell me, well, this guy said this. Show me what they've done. Don't just give me lip service. And the more I hear these guys talk, and the less stock they own, and they don't buy shares, they don't believe in their company, they're getting paid like that, the way they're getting paid, millions of dollars, and they can't buy a $4 stock, tells me everything I need to know. It really does. But by the banks allowing this to go on, this charade to happen, they are literally milking money from the public. And until these guys start selling off, and these guys all leave this stock, it's going to stay floating here for a minute. You might be here 2 years from now and saying they still need to close. They don't need to close anything. Those doors are closing. Those lease agreements are there for 10 years, over a decade. There is nothing you can do. You will continue to lose money for 10 years. Believe it or don't. That's it. Peace.